Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And we figure, oh, there it is. Let's kill that. There we go. And so it is Thursday, and it's the Thursday before Christmas. So the planet is really going to start to slow down now. Now, today you can see, what do we got up there? We got the dollar index to your left on J4X, and that is on a daily. You see the pressure is on there for the last couple of days. What's kind of curious is that the other dollar index that we follow is kind of flat, which is really surprising. Let's put that up there. And the pairs trades are having a problem really showing any strength, but then again, it's the holiday. I mean, the planet does slow down dramatically over this time period, and no stopping it. You can see here, see the way it's just been sideways. And then when we turn off the hinky ash key, let's do that. Right, there's the hinky. There we go. You can see to a certain extent. I mean, you can see the last 3 days we're actually up. Let's say the last 2 days. The last 2 days there, you can see we're actually up. It's the hinky ash keys that are driving them down because of the momentum. And you can see they've met that bottom. They did it again today, and they kind of lift up again. Let's get the hinky going again. There we are. And so you can see, it's pressured. The green line on the daily is at 27. You can see the dashed line, 36. So I guess basically we can move that up like that. So right now the dash line is dominant. The green line is underneath it, figuratively and physically. So that pressure is on, and you can see the sideways. And over here on Chicago Quant, you can see that we are flirting again. We've pushed it into the sell there yesterday. He's matching up to a lot of this red here. You see that same thing here. It's pushing in there. We've been a red and a green. It's kind of stumbling along. We're in that weekly sell now for weeks. Let's show you how the weekly looks. That pressure has been on. Here it comes. So the last couple of days we've talked about basically fixed markets versus what's the word I'm looking for here? Fixed versus free markets. We're definitely seeing that action. In the sense of what is really going on in the marketplace in general. We're really seeing. Also the holidays are kicking in, so it's not that dominant. We've seen, the stock markets and so forth, interest rates kind of going sideways down. Interest rates, in other words, not, and the stock market sideways up. I think this morning it's down a little bit. As we take a sip of our tea there. Let's see. Let's take a look at the stock market. But you can see that the currencies themselves are pretty much unchanged, and it's going to stay that way for a day or two, I'd assume, unless something strange happens. Talk about strange. I mean, Zelensky was here in combat gear, or in, fatigues and so forth. He addressed the House of Representatives. And let me think, what else? And he went to Biden's office and hung out in the White House, and it really is turning into a very, I don't know, how do you describe it? It's turning into a free societies trying to show that fixed societies like, the Russian Federation and China and Iran, in other words, democratic societies basically are going to stand the ground. As much as Biden has looked like a fool and an idiot as usual, one thing is for sure, he has allowed this to happen. And now America looks like they're going to spend over $100 billion against the Russian Federation. Trying to save, not save, try save. They will save. They are more dominant. So I mean, they're talking about giving him another 45 billion. The Russian, even the official Russian defense budget for the year is something like $42 billion. I mean, we're basically giving them 2 years of defense budgets bigger than the Russian one. So, with superior equipment and technology, because basically they actually do build the stuff, whereas in a lot of other countries, these other countries like China and Russia and so forth, they build it and then they go sell it. Or they don't build all of it. They keep some of the money for it. You have all kinds of strange things. No wonder. I mean, let's put it this way. If it was the other way around, America was trying to take over Ukraine, it would have been taken over and done with a long time ago. I mean, here it is. Where are we at? December. It's going to turn into a year in February. It's like we're 10 months into this thing, and Russia, all they can do is kill civilians. I mean, that seems to be their MO. Fire rockets and kill civilians. So, I mean, that's not exactly an invading force. That's an intimidation. So, but he was here yesterday, and they're giving him money. They're giving him lots of money, and training and everything else, and equipment. And Zelensky was asking for tanks and planes, and so I mean, what a weird and why I bring this up more than anything else. I don't have a desire to bring it up, but it doesn't seem to have that much of an effect on the stock market or the currency markets. The dollar's being sold down. Let's take a look at that. In other words, since the invasion, where's that at? The invasion was like this. The dollar was being bought for safety, I guess, and inflation. Basically, inflation more than anything else. And look at it. It's coming down now. It's coming down. So obviously, the war is not having that much of an effect on that. It's not having that much of an effect on the oil sector. It's not having an effect on, I mean, the stock market might be actually higher now. Let's take a look and see. But I know the Dow Jones Industrial Average is only down 8% for the year. The tech industry is down because, the economy is slowing because of the inflation. And are they all related? Of course they're related on some level or another. But when it really comes down to it is that what we're really seeing is a fight between free society and a fixed society. The fixed society is Russia and the Chinese and the Persians, and a free society is Europe, America, and the rest of the world. So, or not the rest of the world, but a lot of the world now. When I was young, something like 27% of the world was free, and something like 73% of the world was in dictatorship or what they considered not free. Okay, I think it was actually 24% to be exact. And now it's like the opposite. So a lot of things have changed, and one thing is for sure is that this is not affecting. I mean, the dollar is falling. So obviously this war and so forth and all the money being put out obviously is putting pressure on it on some level on the downside when it comes to the money being put out. But at the same time, it's really way too, look at that. It's just way overvalued. Just way. The dollar belongs in the 90s when it comes to the dollar index. It's just way overvalued. And when you go back and look at it historically, 90s have always seem to be the area, 88s, 90s, bouncing around 93, 94. So, like I say, unless something really strange happens, I would imagine that the marketplace is going to stay like this. We're going to see the, the stock markets go sideways, maybe down a little bit, up a little bit, back and forth until the economy starts to turn. And at the same time, interest rates are already trying to show us, that. Let's see if we can let's put the interest rate up there. Here's the 30-year bond. Where is the 30-year bond? I'll go find it in a second. Is it in here? There's Bitcoin, copper, dollar. Let's go find it. First, we'll put it up on Chicago Quant. And there's the bond. When the price rises, interest rates are going down. So we've seen this thing. Interest rates have really made a nice dramatic move. I mean, you can see. Let's try one back like that. You can see, it fell down, and interest rates rose. Interest rates rise as the price goes down. And so then now it's bottomed and it's come back up into this area here. So we're seeing, money moving in that direction. Let me open up old J4X and we'll find the 30-year. Oh, you know what? I probably can do it this way too. Just try it this way. Let's see. U.S. Let's see, U.S. bond. Let's see if it does that. Not there. USA bond, maybe? Oh, let's try this again. USA. There is the 30. There's the three indexes. Let me just open up the old J4X for a second. We'll take a look at it over here on that too at the same time. There it comes. And there she goes. Yeah, I mean, it's going to take some effort here. Obviously, things are not as bad. You would think if Zelensky came into town, in other words, if you were speculating on it, you would have to believe that there was going to be some type of negative effect. Well, we're not seeing. I understand that Mr. Putin did say something. He did. I think what he did is the moment he knew. Okay, here's the symbol. That's copper. The moment he knew, it sounds like he. Let's see. There. I guess he gave something to Belarus or something like that, asking the pilots to bomb. See, I'm still looking for the 30-year bond. Let's see. So there's Brent, copper, gas. The bond is in here somewhere. Bitcoin. Let's see. Where is that at? If anybody knows what the U.S. bond looks like symbol-wise, I'd like to put that in there. I'm scrolling through it all. It'll jump out sooner or later. We're not really seeing a lot of global. Oh, there's Bund. There's European Bund. See what that looks like. That's interesting. It's doing the same thing. The price tag's rising up. So what is that? The Bund in. Let's put the Bund in then. Put the Bund in. So that is BUND. BUND. There it is. In the euro, no less. So that's good. And you'll be able to see that here. You see how it's been rising also. Same thing. Interest rates are dropping. Now, there's no doubt that it's making a little curve here at the moment as we speak. But I bet that weekly is going to look pretty strong. Maybe only 1 week in a sell. No, 2 weeks maybe sell. Yeah, that's it. So you can see this move that had occurred here. Now they're starting to punch on it a little bit again. Remember, as the price drops, interest rates are going up. And so when it rose here, interest rates were going down. And now they're starting to do that opposite action. Whereas ours is just doing a little bit curve here. So it hasn't taken out that low on the U.S. bond itself. So, all right. So from there, let's go over to the pairs trades, unless someone wants to see. So, hey, Robin, how you doing? Be right back. Okay. All right. Let's put the euro up there. There it is right there. That's the weekly. There we are. Now you see right there, it's trying to get into the buy. It's trying, but it's the holidays. So we don't expect a lot out of the markets to begin with. Like I said, only if something crazy happens. And geez, I think we just saw crazy, and it didn't have an effect on the market. That's what that whole talk is about: free societies, free markets, free societies versus fixed. And as we see, as I'm sipping my tea here, Zelensky comes to America, and America gives him basically another full year of the same um, budget as the Russian Federation is for their defense budget. So, what can you say? All right, that's crazy. So, I mean, we see these crazy events occurring, but it doesn't seem to have much of an effect. And you can see the weekly here. Let's go to the daily on the euro right there. Daily is just kind of chopping sideways. Same action we're seeing right here. Just sideways chopping for a couple more days. We'll see. I'd imagine today will be as dead as tomorrow, and then obviously we're closed on Monday. I don't know what Dukascopi's doing. Are we open tomorrow? Are we closed? I'd imagine we're open and then closed Monday and Tuesday or something like that. Oh, no one's mentioned it to me, so if I'm set to broadcast, I will broadcast. All right, from there, let's take a look at the British pound as we sip tea. Right there it is. You can see the daily's been pressing down even more. They're having some problems there, I guess. Let's put it up over here. Is that it? Nope, that's the Swiss. Let's go back to that again. There it is. You can see the pound has been rolling over. You see that right there. All that action. You see, the indicators right there, weak. And the weekly itself is still pushing down towards the zero line, which is the dotted line right there. Over here on J4X, we've got the dashed line trading at 14, and we have the green line trading at 12. That pressure is on the downside. So, we're just seeing holiday adventures. Let's take a look at it. It probably doesn't look anywhere as bad as there is there when we turn off the hinkies. Actually, it is. 2 days of firmness there, and then they really slammed it yesterday, and today they're doing it again. Probably supporting what is that? The one. I'd say that's like the 1,819 area. Because these are 18, 17, yeah, so there's probably some support in there. Let's turn the hinky back on again. There we go. And from there, we'll slide over to the Swiss. See what the Swiss is up to this morning. That's been very firm ever since it seems like they've resolved their issues with Credit Suisse. There it is right there. Looking. Now that's bullish. Remember, this going down is gaining against the dollar. So, as much as the other two products, the euro and the British pound, are weak, I guess you could say, or sideways with not much stamina, not much strength. What we see here when it comes to the Swiss is still pressing down, trying to make highs. That's good. Nothing better. Cold weather, hot tea. And there is the Swiss right there on Chicago Quant. And you can see it is trying to perk its head up a little bit. Nothing major, but it is trying to perk its head up. Let's see, what else we got to say? I guess that's about it when it comes to these guys. We'll go over to the Turkish lira, I guess. Yeah, that's where we're at now. We do the Turkish lira. No, we do the yen. That's what it is. We watch the yen still in sequence with it. And the yen, doing the same thing, gaining a little bit, just kind of hanging out. on that long weekly sell. At the same time, everything seems to be happier, I guess you could say, or better, or much more comfortable. I don't know, how do you describe it exactly, but one thing is for sure is they are um, they are not selling the yen anymore against the dollar. I'm having a couple peanuts since it's such a quiet morning and no one's even talking to me. So I'm going to chew on some peanuts here and drink some tea with it, and that's fun. Until someone says, "Hey, Doc, tell us what this looks like or what that looks like." All right. From there, let's put it up on J4X. There it is. Yeah, that's the change of policy. Isn't that amazing? They're willing to pay more interest on their currency. And what comes from that? People buy it. The classic fundamentals, that Giannis and everybody else talk about at Ducascopy are the fundamentals, We're just not seeing those fundamentals execute like they used to. All right. From there, we'll jump over to the Turkish lira. Right there. That thing keeps on pressing up. Usually this time of the year, you see some type of distortion because of the end of the year setup. But it seems like they do that now more in October, November. So, we used to be able to show you them borrowing money from the Federal Reserve or doing things like that. And I used to say, geez, why don't they just print more themselves? But I guess they're not allowed to print as much as they think they can. He's back. Quiet day, Robin. Almost like nobody's around. All right. Let me give it a... No, don't need to give it a refresh. All right. So from there, let's jump over to the Turkish lira. Against the Euro Turkish lira in particular. You can see there just kind of cruising along in a weekly buy, not really letting go. I don't know what the new year is going to bring. Let's hope the poor product does not. Let's see, actually what was interesting is when we go back to J4X, let's do that. It's actually from that panic move at the end of December of last year. Let's go to the weekly. It'll show it. And then the government came in and gave out free puts for all investors. So what it's trying to do is it's trying to actually go take out, it was this panic move right here. So the market got into this, Turkish lira got into a panic move. It went from, I guess, what was that? That was the whole fourth quarter. It went from 10, it doubled to 20. Oh my God. What a horrible thing to happen to the people living there. And then, they gave out free puts on that big move right there. That's what did that. So if you bought the currency, they gave you free puts to protect it. And then that seemed to calm it down. We thought that was brilliant myself. It was one way of not having to spend so much money. But then, as you can see, as time goes on, they're right back to where they started from. So, the bigger question is, let's see, where's this at? So the dashed line is now trading in the, where's that, the 85 area, and the green line is trading at 80, 84, okay. So it's just slipping underneath. It's at the high end of its range. I don't know if there's another surprise coming. Sui Mill, you want to see Sui Mill? Sure. As it's loading, I'm going to go have a sip of tea. Nice. Yeah, there's the Sui. Number 16 gets Sui too. And there's soy meal. You want to see soy oil? There's soy oil. March oil. Getting ready to make the change the other, the Jan contract. I'll switch over soon. The volume is still good in there. They're still the second most active. But I know that's why I stopped sending out December cattle, because they're down to 500 contracts a day now or something like that, even less. So, whereas the rest of the the product itself is trading in the where is it at? Like 60,000 or something like that. Let's see. Let me just do it like this, and then let's go to Sui oil. Yeah, Sui oil. Jan is 2,400 contracts traded, and March is 5,600. Open interest is 148,000, and in January open interest is 39,000. And so once May Sui oil beats, or once that becomes behind, volume wise, and I think live cattle is the same way now. That's why I've moved out of it. Yeah, no, they did some contracts yesterday. They did 1,300 contracts yesterday, but February contracts are 35,000, and April contracts are 15,000. So open interest is only 1,800 in December cattle. So it's like nothing compared to 139,000 in February and 75,000 in April. So that's why we don't pay attention to December anymore. But there's your action. You can see that there. It's trying to turn up. I think crude oil is looking the same way. It usually follows the crude oil market. So here is crude oil. There's February crude oil. I think it touched, was it 79.90? Almost touched $80 today. I wonder what Brent's doing. Let's see what Brent is up to. There's Brent, 83. What is that going on there? What's up with that product? Oh, I guess that's the bounce. That's the weekly too. So the weekly is trying to do a little turning in there. Let's go to daily. You see the up move there. There you go. So that pressure, and that's where we're at the moment. You can see that if oil is moving up, most of the time soybean oil does the same thing, as you can see right here. See, it does that. It's the same pattern. And that low, it's a low of, well, if we put the weekly in there, it's a low of a long time ago. And you can see here we're flirting with the weekly buy too as we speak. Let's see what the Brent, well, we saw Brent. Brent is on the edge of playing with the weekly buy. Tea time. All right. So I guess because we're looking at oil, we can go look at Canadian. Because this is rising, Brent is moving up, crude oil is moving up. More than likely, we go over to the Canadian dollar, and it should be moving up. I'm sorry, gaining against the dollar, and it'll be physically going down. Not that much of a down. Actually, it's trying to aim up today, which is really odd. Made new lows, and now it's up. Really thought that the last couple of days with it trying to get into the sell, we'd get back down into this 135 area. But we're stuck in the weekly buy, so that's the battle that's going on. The longer-term trend is, see how they're sliding slowly up, and at the same time, when we go over to crude oil, right there. Well, that's crude. So from there, Let's see, what did I want to show you? Oh, I know. Yes, you can see that. It's been gaining in value, but overall, it's sliding down. It's just making that little turn. And then when we go back to, there it is. No, that's not it. There it is. It's trying to curve also, but not that strongly. I don't think there's any conviction for two reasons. Again, holiday season, one, they're trying to settle up for the year. And the second reason is I don't think that, I think that oil overall is going to find a way to go down more than it's going to go up. The Congress is going to be really fighting to start exploring oil again and pumping oil again. They're not happy. I'm going for tea again. They're not happy that the country is paying what it's had to pay. I mean, since Biden took office, oil, gas at the pump has tripled in price, quadrupled in price. We're used to $1.50, $2.50 oil, or a gallon, and we're playing with the threes around here, which is nice, of course. 310, 315, but it's still 60% too high, and that's. But Congress is going to be, it's going to be one of the more interesting years to come, because now what they've done is that the Senate has not really supported the House of Representatives, the Republicans. They may just go out on their own and start doing whatever they want to do, and that's what their job is, to do whatever they want to do. They've been voted in with 5 million more votes to do what they want to do. And they will follow the law and do it. And so it's going to be very interesting. So I would assume oil in the end is going to find a way to go down more than go up. Obviously, the Russian Federation is not going to, has not been able to hold the price of oil up. All right, and then from there we look at gold. Let's put gold up on J4X. There's gold right there. And gold is lifting again. It's playing with the highs. This is the daily. You can see it's been doing a good job for, months now. All the way back to, it's taking out the highs of the summer now, June. Or not the highs of summer, but, actually you can see here, there was the highs of the summer are way up there in the 2000s area. So, but you can see it's getting firmer and firmer. Looks like a reverse, it's a head and shoulders bottom, that's for sure. And then let's take a look at the South African Rand. Right there. And it's breaking the political triangle. So maybe things have calmed down. We don't get any news out of Africa to begin with, so we have no idea what they're really doing over there. Working on the tea. So, I guess they're going to take out this low here, and maybe we'll see 16.5 or something like that in the South African Rand against the dollar. Let's see. From there, we'll go over to silver. Since we've got it up there, we might as well just take a peek at it. Boom, 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 boom. Right there, there's silver trading at 23.89. Let's see what the March contract is doing here. Oh, and there's gold right there too. You see that's just been stalled up there in those 1820s for 3 days now. And let's take a look at the silver. There's silver. Silver kind of same thing, but making, closing lower each day. But it's still in the daily buy, still in the weekly buy. There is definitely, interest in the marketplace. I've been hearing stories. Someone tried to tell me a couple nights ago that They believe that young people now, since they got beat up in cryptocurrencies, are now trading gold. They're turning them into gold bugs. It was like, okay, yeah, right. I don't know if that's the case, but one thing is for sure is that I think the cryptos have had their issues. I defended Bitcoin and Ethereum, but I really, I know. Let's put Bitcoin up there. There's Bitcoin. I mean, Bitcoin, out of that whole mess, goes from the 20s down to the 16s. 25% drop. Not even a 25% drop. It's like a 22% drop. That's not bad. And it's going back up to 18. It's holding very firm in there. I don't see much of a problem for Bitcoin or Ethereum. What I see is the ones with less value, in other words, less credibility, they're having the problems. But I think that what's going to happen is that the cryptos are going to survive with no real problem as far as I can tell. I don't see any particular reason why they wouldn't survive. They're just another alternative asset class at this point, and there's no stopping it. And I don't care what they try to say or do, and the end result is that unless they pass a law to make it like an illegal drug or something, then what's really going to happen is that it'll survive. There just isn't any reason for it not to. All right. So from there, and you can see it too in the stock indices. Here's the S&P 500. Perking down a little bit, but the last couple of days it's been firm. You can see it's in the daily buy. The weekly's not that far off. I mean, it took a lot of work to get it into the sell from here. Where's it at? Let's contract it. There we are. I mean, it's still up in the high areas. It's not, let's put it this way, it's not all the way down at the low lows, Let's see if we can tighten this up one more time for you. I mean, all those lows back here in the 3,500 area. And we got the 4,100, and now we're orbiting around the 38, 39 area. Not exactly, the worst thing in the world. And like I said, Dow Jones Industrial Average is only down 8% for the year. That's it. That's not bad. I mean, compared to, say, the NASDAQ or the tech companies are really marketing companies in many ways. They make their money selling advertisement, and obviously when the economy is turning sideways to down, there's going to be pressure on them for earnings. Nice tea. So, that is pretty much the nature of it all. Let's finish off the Mexican peso. Mexican peso has been somewhat of a surprise in the sense that it has read the political spectrum over here very well. And look at it, it's parked right on the bottom end of the range now. That almost 3-year range. It's just parked there. They're waiting to see what the Congress does. I guess if this thing starts to dive down, that means the Congress is going to be very successful over the next 6 months, I think, or at least 3 months. Something like that. That's what that's trying to tell us. Alrighty. From there, where do we slide to now? Let's go to we could finish off let's take a look at copper and platinum, see if there's anything going on there. And then from that action, let's see, there's silver like that. And gold is flat, as you can see right there. And copper is right there. You see copper acting pretty much the same way. Just kind of like the way gold is holding firm. I always like to call that the Chinese gold. Copper is. We'll save that even. There we are. And then let's take a look at let's take a look at copper up on J4X. Since they have it, we can show it. where's copper at? There it is, right there. And you can see that it's a nice move off of the $3 area. Was it even 3? It was 330. 325, that's at 324 down there. So I mean it's done a nice job. It's moved up into the 380s. And let's see, the dashed line is trading in the 43 area, and the green line in this case is, let's see, we do this. The green line is above it, figuratively and in algebraically, 58. So it's 15 ticks over. And then what we'll do is we will go over to platinum. See what the platinum's doing today. There's platinum. And you can see there, it's flirting with the weekly. It needs to get going. Obviously, the buyers are not there at the moment, which is interesting. I guess we're going to have a hard time getting the silver and the gold to get rolling along again if platinum won't lift up. So we'll keep an eye on that. Platinum is definitely the key to that. Once they start buying platinum, usually they buy everything. A little more tea. There we go. Yep. So that finishes that off. Now let's take a look at the energy sector. We saw crude. There is February crude. Let's just take a nice look at February crude, and then let's look at April crude. They're about $1 difference. 78.97 in the back month. So the contango is strong again. Remember, they became at parity for a while there. 79.26 versus 78.90 something. So it's about a 30-cent contango. That's not too bad. Remember, they used to be trading at $1.50, $1.25. And then let's go with the natural gas up on J4X. Right there. There's a natural gas in the United States. Let's see who's... Oh, at least I got a ding. That's cool. Let's see. Someone just texted me. It says they're hunting for alternatives to the dollars, and my answer is always. Always. We traders traders in the market look every day. And that's the fact of life. We always look for the arbitrage. Always. Yeah, let's see. Yeah, that's an interesting statement. Yeah. We traders in the market look every day for the ARB. There we go. There we go. That's a good answer, isn't it? All right. And then from there, you see natural gas moving down again. Where's that? 520 something. Let's take a look at it over here on J4X, or in Chicago Quant. Let's see. There's natural gas. New lows. Nice. So you see that pressure on that. still in that weekly sell for 4 weeks now with no problem whatsoever. And the action seems to be telling us that very clearly. Let's check it out and see what the oil company down in Spain that we follow is doing today. Yesterday it was down in the 25.20s. So I was kind of impressed. So with this dropping the way it is, I would think that they'd be challenged in 25 even, maybe 24.90 something. We'll see. We'll find it in a few seconds. I think that's it right there. There we are. Nope. It's unchanged. 25.29 at 25.34. Yesterday it was like 28.32 we saw it at the time. So it's pretty much almost unchanged. But we'll keep an eye on that like we always do. And more than likely that is going to be trying to finding a new low too. You know, a 2-week low or something like that. You see here it's even more than that. This is daily. It's been pressing down. Let's see if it comes challenged as that. And you can see it got down as much as, when is that? That was back in October. It got down as low as 22 and change. 22.12. So, and then let's see, you can see the high there of 31 and change right there. So the pressure has been on that, you know, the European market in general for the natural gas. Now, let's see now. What is next? Let's go to, let's see, what did we do over here? We did the gas, we did the natural gas, we did the gas company, and we did the crude oil, and we've seen the contango. So from there we'll go over to the last of least is the stock indices, as we were saying before. They're still feeling a little pain here today. They're down a little bit. The weekly is still in a sell, so we're having problems. There, the Tech 100's not doing any better. Let's check the other three indices out. There's the Tech 100 right there, and let's put the S&P up on the top one on the J4X real quick, just to get a flavor of it all. Let's see, where are you? There it is, right there. And you can see there's a little bouncing going on the daily, but overall on the weekly it's probably still red. There we go. It's just like in Chicago Quant there. A couple weeks in a sell. Not too bad. We'll see. Maybe it'll give them a good punch in January. Let's see. From there we go over to the Tech 100. I think I have Tech 100 up on there now. Is that Tech? Yeah, it's Tech 100. That didn't get into the daily buy yesterday. That had a problem getting in the daily buy. Again, they're very interest sensitive. They're down 20 some odd % for the year, like 23 or 30 or I don't know, something like that. They've been getting beat up pretty badly. So I mean they're very interest sensitive. Whereas like the Dow Jones Industrial Average, let's take a look at that. We'll put the Tech 100 real quick up on the J4X right there. And you'll see how much it's gotten beaten up. What was that? That was like 1,700 or 1,800. What is that? That is basically 1,607, almost 16,800, and it has traded down to a low of 10,400. So that is almost like a 40% drop. That's pretty dramatic, over 40% at one point, and it's only trading at 11,186. So it's not exactly lifting. It's very weak because it's very interest sensitive. Now, when we go and look at the Dow Jones Industrial Average right here, you'll see a big difference. You can see how high up it is. It's actually building a reverse head and shoulders here, and the high was 38. Is that 30? 38? No, 36,954. So basically 37,000, and we're trading at 33,000 right now as we speak. 33,000 with a high of almost 35. So I mean, it's what can you say? I mean, obviously the old industrials who are nowhere near as interest sensitive and at risk to all the bad economy are not really feeling that much pain. And then the S&P is kind of trapped in between. It's like in the low teens or mid-teens. So you have the S&P 500, down more than the Dow Jones Industrial Average, but less than the NASDAQ 100. And that's how that works. As I sip my tea. And then, I guess if we put Bitcoin up there, because that is a good alternative to it all. But it does follow the stock indices. Let's see, where is Bitcoin? Right there. So you're looking there. What's that? 40. Wow, what is that? That's 60 something, right? 68,000, 69,000, 69,000. And it fell to 16,000. So it lost, what's that? 80%. But then when you think about where it came from, 1 penny, it's still up like 16,000 times instead of 71,000 times. So that's pretty good, or 70,000 times, So, it's an interesting product. It has, I think, I've been saying this here for a while now. I think it's at fair value. I think this is the fair value range. I mean, it could go to 13 or 14, and it can go to 18 or 19. So I think that if the stock market looks like, and the economy looks like it's starting to take off, I would imagine you'll see the cryptos lift with it, and vice versa. As the economy is weak, you're going to see the cryptos trading sideways and down. And this is going to be the year that it makes sense finally on a chart. Well, it went from under a penny, to almost $70,000. It was playing catch up, and I've kind of reiterated my thought about that, and I'll express it again. What it really comes down to is it reminds me of Home Shopping Network, and I don't know if everybody here who's going to be watching this video remembers Home Shopping Network back in the 1980s, but it was one moment, it comes out as like a $30 some odd stock, and by the end of the week it's at $100, and then the following week it's up at $200. And it grows and grows and grows because they captured a market that no one else had done. So that is the nature of it. Someone said to me, "You'll be trading dreams shortly." Free markets, free people. There we are. So, it has that same nature to it, and it did the catch up. It did what it needed to do. The cryptos had to, explode in value because they're a legitimate asset. They're a weird asset. They're a strange asset. They're an asset that people don't understand, even to some extent. A lot of people do understand them, though. They're crypto technology. They're the idea that they don't have to be on an exchange. I mean, that exchange thing is almost like a fraudulent thing. The fact that, matter of fact, if I had been in Congress, I would have had them make a law. There can't be crypto exchanges because it would be against the concept of cryptos to begin with. The idea is to keep it away from being connected to something. It's supposed to be free. It's supposed to be able to transact and act like a mini central. You become your own little mini central bank when you own a cryptocurrency. That's what it really comes down to. You can transfer to other people with very little problems, and it has an asset value. It acts like a currency, but it's not. It acts like a bond, but it's not. It acts like a stock indice, but it's not. It's a new type of tool. So, whenever someone said they were making an exchange, I was like, why would you make an exchange? You're supposed to have your own wallet holding on to your own asset. You're only giving a chance for somebody else to steal your asset. unless it's like, J.P. Morgan or, a legitimate company. See, the brokerage houses should have jumped into that. When they started creating exchanges, they should have had the exchanges. It should have been like Goldman Sachs and J.P. Morgan and who else is out there? Smith Barney, if Smith Barney's still out there. It should have been the banks or the brokerage houses creating an exchange, not some odd Yahoo that stole over billions of cryptocurrency away from people by pretending that he was an exchange. There's no need for an exchange. It makes no sense in cryptos to have an exchange, as far as I'm concerned. You can have a bulletin board, where you can trade them much more easier, see bids and offers. But why would anybody park their asset in the exchange for more than the idea that, you don't need it. You just don't even need it. That's the thing. So that's where we are with the cryptos. And I guess we're going to be leaving you with that thought. And that is that they are a whole new asset class that has the ability to move assets across the planet at a drop, at a switch, an instant switch, like turning a light switch on. And so there's no reason for anybody else to have power over your assets, because it's not the same thing. Anyhow, that is that. And we will talk to you all tomorrow, same time, same channel. Everybody get ready to have their holiday. A lot of companies here in the States are closed. So the exchanges are open. And it's a normal day, but it's going to be dead as a doorknob. So this is Doc. Unless someone wants to see something, I'll give you a few seconds here and I'll go sip my tea. But if you don't want to see something, then we're out of here. Nope, no one's saying anything, so let's see. Happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. All right, traders, later. Be safe, be smart. And for those that are not showing up, have your Merry Christmas, Happy New Year, and Kwanzaa, and Hanukkah, and anything else you're getting into the groove for. Ta-ta for now.